employment in South Africa declined at an annualized rate of 2.1% in March, which means that the economy shed over 33,000 jobs, according to the Adcorp Employment Index. This month's index also shows that for the first time in 15 years, South Africa's economy shed 12,000 high-skilled jobs during March alone. We're joined in our Cape Town studio by Labour analyst and partner at Bagraim Attorneys, Michael Bagraim. Michael, thanks very much. Certainly not good news, and that's specifically referring to those 12,000 highly skilled workers. Can you take us through your thoughts on where this is going, and are we heading towards a crisis?
Yeah, this is not good. It's bad, and for this month of February, it's a real problem. Not only did we shed the 33,000 jobs overall, in fact we shed about 39,000, almost 40,000, if you look at that compared to the informal sector, which created 6,500 jobs. So we 40,000 down in reality, because it's difficult to tell where the informal sector people came from. The real problem that I see over here is that we've lost jobs of almost 8,000 in the manufacturing sector, and that's telling, because that's the backbone. We keep talking about the backbone of our economy. The manufacturing is the real problem, and without the manufacturing, the rest of the industry doesn't move. They've also said that we've lost jobs in the retail and wholesale trade of almost 9,000 people. That's horrific. But if you look at it, so slightly skewed again, because government created another 4,000 jobs, and so you've got to balance it up again, because if we're saying we lost 40,000, government created 4,000, we've actually lost close to 45,000. So again, I have a problem. It's not a good month. It doesn't look good, when in fact in February we were supposed to get back into manufacturing again. Things were supposed to be looking up. It's not good, and then our president is still calling for job creation. It was still the cornerstone of the budget. I'm not actually positive at all.
Michael,
it's a real problem.
Michael, just one question. I mean, that to me that points to the fact that there's very little confidence, especially when you're laying off 12,000 highly skilled workers. Little confidence that we are actually about to turn the corner in the economy, and the outlook is that for the next 12 months, we're certainly not seeing a better environment. So what that tells me is that we could see further layoffs in terms of highly skilled workers over the coming months. Would you agree or disagree with that view?
I would agree. The business sentiment is actually pretty low at the moment. And if that's the case, and it's coming off the back of further problems that we're seeing in Europe, if that's the case, then, and people are laying off highly skilled people as we see, that's a major problem. The high skilled loss was 12,000 jobs during the month. For every high skilled person you have, down the line you're going to have unskilled people assisting them. And if that's happened now, we're not looking for much future, at least until about June, July. It'll be interesting to see what the figures are for the month of March.
What solutions can we table at this point so that we don't get too depressed by the information with us?
Well, obviously the solutions are that what we've seen from Trevor Manuel, what he's talking about. The solution is also to try and ease up a little bit on the labour relations. Some of our labour law needs to be remodeled. There is a big attack now from the business community and the Free Market Foundation on the bargaining councils, which is the manufacturing sector, effectively. If that attack is successful, I think we're going to have a big turnaround in employment figures and the skilled people. And obviously we wait with bated breath over here in South Africa as to what happens at the rest of the world. If Europe turns the corner, we certainly will. It's the normal stage. Europe catches a cold. We get flu here in South Africa. So a lot of our manufacturing is dependent on what we're seeing over there. Also the price of the rand, it's been skittish lately.
Michael, thanks so much.
Hoping that
Thanks for that update, Michael Bagraim, Labour Analyst at Bagraim Attorneys. In other news, Mr. Price expects full-year headline earnings per share to be up by at least 20%. The retailer says an accurate range cannot be estimated at this stage, and a further trading statement will be issued. The results will be released before the end of May. Mr. Price closed the day over 6% higher at just under 119 Rand. Earlier today,